Hey, everybody, welcome in. It is Halloween. The markets suck, but some interesting stuff has happened in the past 24 hours, especially with the MicroStrategy earnings call. And there's a lot of stuff that was broken down in that, including a whole bunch of record-breaking items. And I'm going to try yet again to explain exactly how they pull it off. I'm going to go through a lot of detail around the whole infinite money glitch, everything, prize out kind of what Saylor's thinking, what MicroStrategy has planned for the next 3 years or more, as well as extremely detailed price prediction models out to 2035, both bear, expected, and bull scenarios, using a whole bunch of different tools as well. This will be interesting, and this took a lot of time, so I hope you appreciate it, but it's also going to be very heavy, but sometimes you need to understand the complexity of these things to be able to wrap your head around it, to be able to make the right investment decisions. And that's what this channel is all about. So let's jump in. This is called the infinite money glitch. And let me see. MicroStrategy came out with a bunch of stuff. We'll break it all down, but they were talking a lot about their Bitcoin yield, how they want to raise their targets. They talked about a 21 plan. And they want to be able to increase the Bitcoin yield by 6 to 10% annually. For my models, I assumed 8% actually as we go forward. It'll be important later when we get to it. And the company hopes to get to somewhere, I calculate, maybe 415,000, maybe 450,000, maybe 600,000 if we get a nasty bear market. That's all possible. And it is completely mind-blowing what they are planning to do, generating a compound yield on Bitcoin holdings. And again, it's deep. So buckle in, everybody. Thank you all for coming. Thank you to the mods in the chat too. And this is not financial advice, just a guy on the internet. And by the way, thank you to everybody on Patreon as well to make this possible. This is from Brian Reeves, 19X. Patreon sub is another greater than 10X return, by the way. Thank you so much, Brian, for being part of the family. I'm going to get into this. We're going to talk about a lot of stuff because it's tricky. The world of finance is about to be flipped on its head. And I'll get to why I'm wearing a flannel shirt in a minute too. But we're going to talk about, the Bitcoin strategy overview, how they issue bonds to fund Bitcoin purchases, what it means for shareholders. Understanding convertible bonds is very big. The new thing, Bitcoin as crude capital, not crude as in crude, but crude as in oil. Also, how to leverage Bitcoin's volatility, which is a big part of what I do, both with ARB and hedging and stuff like that. Also, we'll look at generating Bitcoin yield, break it all down, the permanent capital strategy, some of the nuggets from Saylor, and my price predictions through 2035, and the infinite money glitch. By the way, full disclosure, I did have a price prediction for MicroStrategy for this bull market, and it was $1,200 before the split. That's $120 now. We completely smoked that. That's how much I sandbag. So my price prediction in 2023 for MicroStrategy, my bull case is 1,200, and we more than double that and got a 10-for-1 split too. So crazy. Now, also why I'm wearing this shirt, not because it's Halloween, but my third ever video, I was wearing a flannel shirt, and that was about MicroStrategy. I didn't even use the logo back then because nobody knew what it was. So this is the shirt, and we're back in flannel. Happy Halloween. Plus it's winter, it's getting cold, so it's comfortable to wear as well. Now, let's get into some of the record-breaking stuff. I warn you all, this is going to be deep, and I'm going to go real fast, but it's so important to understand for a whole host of different reasons. First of all, this is MicroStrategy's capital raising plans for the next 3 years. Okay? Their market cap is pretty much 42 billion. They will raise more than that market cap again. Basically, do this in two ways. One is issue equity to buy a truckload of Bitcoin, and also issue fixed income. We'll get to that, what that exactly means and how that works and why it's extremely beneficial as well. So we've got 21 billion in equity plus 21 billion in fixed income, 42 billion capital raise. This is, ladies and gentlemen, the largest capital ATM raise in the history of planet Earth. It's bonkers, the scale at which these guys think. It's crazy. It's crazy. Anyway, it's also very exciting. So let's get into it. The analysts so far as well like the news. When people heard last night that MicroStrategy is going to issue $42 billion, everybody freaks out. The price fell to like, I think it was 207. Now it's about 250, 245 last time I looked. But Benchmark maintained a buy and increased their price target to $300 a share. Again, it was 207 yesterday during the dipperoonie. Crazy. So the analysts are not spooked because they're getting it. And I'm going to try, during this video, explain, hopefully, what this infinite money glitch is about. There were also a couple of key quotes that I found very profound. I didn't mean for that to rhyme. During the call. One is MicroStrategy is the largest holder of permanent Bitcoin capital. Permanent. They will never sell. He said that multiple times. A lot of people didn't believe him. I said, we're never going to sell our Bitcoin. So when it goes into the MicroStrategy black hole, it'll never come back out. Also, another cool thing is probably the most important is this. And again, it's on dilution risk, and it's me reading between the lines. But I got the feeling Saylor is very cautious about diluting his control, fearing it may lead to a loss of control. Therefore, he wants to minimize the amount of dilution for the stock so he can stay in control of the board, etc., make decisions to ensure that the Bitcoin strategy remains intact. That is so important, ladies and gentlemen. So important, especially as a shareholder. We've seen what dilution does to shareholders if you own Bitcoin miners. But these guys, if they do issue shares, they take that cash and they turn around in about 48 hours and they buy Bitcoin with it. And their timing of Bitcoin buys has gotten better and better as well as they go forward. So let's jump into the beginning of the numbers. First of all, Bitcoin yield. I'll try to explain again what that is. It still is a hard concept for some people to wrap their heads around. But basically, if you look at their quarterly Bitcoin yield is 4.4% for the quarter and 17% year to date so far in 2024. And their future goals are to bring that Bitcoin yield from 6 to 10%, maybe 4 to 8%. We don't know exactly what it's going to be. It'll depend on Bitcoin price from 2025 to 2027. And that means they want to buy a truckload of Bitcoin as they go forward. And a positive Bitcoin yield means shareholders are effectively increasing their Bitcoin ownership through MicroStrategy stock. That's the most important thing you need to know. How are they going to do this? They generate what they call Bitcoin yield. And I'll break it down real quick. First of all, they focus on increasing Bitcoin holdings, Bitcoin bags, whatever you want to call it. Then the company employs different instruments to do it, issuing a whole bunch of different stuff. And they leverage what they have to buy more, as well as issue treasuries, bonds, whatever you want to call it, issue stock. That's what I used to call financial jiu-jitsu in MicroStrategy, and I found it super interesting. Again, easy way to think about it. We'll get to the end of the summary as well. But you're issuing a wasting asset, a melting ice cube, fiat, to people for multiple years at 0% interest, and you're buying a hard asset with it. That's basically the glitch, but they do it in multiple ways. We'll get into that as well. The other thing that really bogs people down and they never understand, and he hinted at it yesterday in, as usual, a very eloquent Saylor manner, he took Apple as an example. A stock is valued. It has a market cap based on future business expectations, basically future business profits. And he said 98.5% of Apple's valuation is based on future expectations. If they found out they were not going to be able to sell any more iPhones, the price of the business would tank by half overnight. It's that simple. And only 1.5% is tied to its liquid assets. So the point is here, most important point, you are betting on a company based on the expectation of earnings in the future. And their version of that is they buy Bitcoin at, say, $30,000. It goes to $67,000. That's technically earnings. And that's the whole thing. Now, here's some Bitcoin yield math. I tried to break it down in simple terms. If Bitcoin as a price is going to grow at 30 to 50% per year, and MicroStrategy can, say, increase their yield by 5% in a quarter, that means 50,000 Bitcoin annualized. And that translates to a $3.6 billion annual gain. You take that $3.6 billion, multiply it by a PE of 50, which is what you typically use for a fast-growing company, and you get a market cap of $180 billion if it were valued as a traditional stock. Okay? This is probably the most important slide I have here. I've been talking about it for a long time, but still, some are, especially hedge funds, etc., they're obsessed with the premium. The premium. Don't be obsessed with the premium. Imagine it's Apple and look at the future earnings and the future growth of the price of Bitcoin. That's the way you need to think about it. If MicroStrategy was valued the same as Apple based on Bitcoin and its history and price appreciation and the yield, Bitcoin yield, basically the market cap of MicroStrategy needs to be more than 4 times larger what it is today. That's the math. Now you could shave this PE down to 5, then you'd be traded like a utility company. The point is, it's not. It's very, very different. That's why the whole world of finance is being turned on its head. Now, there's other things happening too that's going to help this Apple case. Let's call it the Apple case. Effective date, I think it's December 15th, 2024. For those companies that are launching financials after that time frame, this will really help companies that have a big bag of Bitcoin because it will allow them to do fair value accounting on their balance sheet. So instead of taking impermanent losses, they can now reflect the price of Bitcoin. And imagine Bitcoin goes to $100,000 and they have 222,000 or 252,000 or whatever it is Bitcoin at a cost basis of around 30 grand. They're making a lot of unrealized profit gains in that particular quarter. And that's what's really going to help them going forward. And I assume, by the way, they're going to adopt these rules because they'll have enhanced transparency. People will get a better feel for exactly what the net income is based on returns on Bitcoin. And they'll be able to report it in real time as well. And that will be extremely important as we go forward. So the accounting systems, accounting rules are modernizing to take care of this infinite money glitch as well. Also, this was another one I posted yesterday. If you imagine, this is the old Bitcoin multiplier, and it was kind of like a little thought experiment. I'm sure many people are doing the same thing. I first came up with the Bitcoin multiplier at 21 back when Tesla bought Bitcoin because I could back into exactly the impact of that buy of $1.5 billion. But now just imagine for a second, MicroStrategy is the only buyer of Bitcoin. They will be buying $42 billion over the next 3 years. That's their plan. So let's take a couple of conservative multipliers. We'll take 75. My multiplier was 21, then it went to 56, then it went to 112 after the halving. We'll take 75. If they were the only buyer of Bitcoin, the price would go to 230,000 with this 42 billion injection over the next 3 years. If you take the Bank of America multiplier of 120, you get to $325,000. And that assumes nobody else is buying any Bitcoin. Of course, many, many people are. But this is extremely bullish. And it is a substantial amount to spend on Bitcoin. Remember, it's a very small, finite asset. And what's really bizarre today, Bitcoin is down $2,000. And the ETFs yesterday bought nearly a billion, and they bought nearly 900 million the day before. We had the second biggest day ever in the history. And I just calculated this morning, the average ETF daily purchase of Bitcoin is 2,000 per day on the nose since inception, since January 11th. That's over 4 times daily issuance. So MicroStrategy will not be the only group buying Bitcoin. There's going to be pension funds. You got Florida thinking about it now. You got Wyoming and a whole bunch of other states. You've got sovereigns across the world. You've got countries mining Bitcoin with next to free electricity. It's crazy. It's scarce. This thing is going to go up, especially with that tailwind of MicroStrategy buying. Now, the options, this is another piece that Saylor said on the call. I did warn you, this is going to be complex and long-winded, but I'm trying to prize out all the key nuggets that you need to know. If a company like MicroStrategy, remember 21 billion, that is the amount of shares that they will issue to buy stuff, and another 21 billion will be fixed income, as they call it. If that is the case, Michael Saylor said you have a couple of options. You could buy another company. You could buy bonds. If you buy bonds, you're guaranteed to lose $2 billion a year because of debasement. You could buy real estate, you lose. And he said it's best just to buy Bitcoin. It's a no-brainer. And I'm going to dig into the dilution and what it takes in great detail. How much dilution will there be over the next 3 years for them to raise $21 billion? And that'll go into my price prediction model in a minute too. So stay tuned for that. The other cool thing was their principles. They have 9 Bitcoin principles. Buy and hold indefinitely. Prioritize MicroStrategy. Common stock, long-term value creation. They are looking out for the shareholder. Treat all investors with respect. I love that. And they want to structure MicroStrategy to outperform Bitcoin via intelligent leverage. I love that too. Acquire Bitcoin continually while achieving a positive Bitcoin yield. And grow rapidly and responsibly. They're very, very focused on having a pristine balance sheet so they don't get liquidated in any way as well. And what else? Innovative fixed income securities that they're coming out with too, and promote global adoption of Bitcoin as a treasury reserve asset. All these roads, all these elements are not only good, but also will help the Bitcoin price appreciation too, which is the end game. This is basically the most perfect game theory playing out live. Now, another piece too, more on the Bitcoin strategy, MicroStrategy Bitcoin strategy, is, again, they will never sell. I have to repeat that because it's so important. And they do believe Bitcoin will outperform traditional assets such as the S&P 500. And they also believe there's going to be a huge radical shift in corporate treasury management. We see that right now with the Microsoft vote. Should we buy Bitcoin? Asking shareholders. Huge. They'll probably say no, I think. But at the same time, the Googles and the Apples of the world are paying attention to this too. And finally, they have this thing that we always spoke about, first mover advantage. There will only ever be one MicroStrategy, even if Microsoft and Apple and Google decided to follow the strategy. It's too late. They'll never be able to accumulate enough Bitcoin to crowd out their existing market cap, which is based on their existing businesses. Very important. MicroStrategy has that advantage, which again makes it unique. And few people get that piece too. Also, this is kind of the most important thing. The issuing bonds to fund Bitcoin purchases. Easy way to think about this. I won't dwell on it, but if you want to read through my words, basically, they borrow now and pay later, while the asset that they buy now with borrowed funds goes up. Easy way to think about it. It's not hard. That's the convertible kind of bond issue. And more on convertible bonds too. Again, basically it's a hybrid security that features debt and equity, and it allows investors to convert their bonds into shares of the issuing company at a predetermined price down the line. The MicroStrategy gets cash from these people that buy these convertible bonds, and the people that buy them are excited because they get fixed income on the bond, even though the rates are very low. But they know the stock is going to perform well because it's a function of Bitcoin price, and that's going to go up, especially when you have a period of 3 to 4 years, 5 years, you know it's going to go up. And the other important thing is bonds provide downside protection through their bond structure, making them an attractive option as well. So nothing but goodness from this particular strategy. And there's more details too. I will not go through this, but I put it up there so you can see all the details. The two things that you need to focus on are what's in bold. Bond issuance allows MicroStrategy to raise money without immediate equity dilution. That happens 3 to 5 years down the line. They get the money basically for free, buy Bitcoin with it, Bitcoin goes up. That's it. Then they give them the shares 3 to 5 years later where it doesn't matter. We'll get into dilution in a second too. The other important thing is the second bullet there. Bondholders benefit from fixed interest payments and potential upside of Bitcoin value appreciation through the share conversion. This is their way of getting access to the upside of Bitcoin. as it's there. It's still struggling at 70,000, believe it or not. Crazy. Anyway, that's the Issuance strategy. The other thing that I thought was very profound in the call, we'll get into the price predictions in a minute, I promise. But it's very important for people to understand this. And I thought this is a pretty cool analogy as well. And just as oil became a crucial resource after the invention of the kerosene lamp, Bitcoin is seen as a commodity with significant real-world applications. A lot of people used to call Bitcoin digital energy. Michael Saylor used to do that. Now he's switched the analog to what Bitcoin is today is to what oil was. And this is kind of how they conceptualize it as crude capital, similar to how oil companies view crude oil. So crude oil can be turned into many different products, many different revenue streams, and that's the exact same thing that Michael Saylor is doing. He's creating different financial products that attract different types of investors at different stages, and they can refine their Bitcoin as oil is refined through the issuance of securities, such as bonds and options. And also, this enhances their investment appeal and it generates additional revenue streams, all while maintaining a very strong reserve of Bitcoin as the foundational asset. The only difference with this oil analogy is it doesn't need to be burned. It's kept, and they spin off all these revenue streams from it. And while they keep it, it goes up in value. It's, again, beautiful. Also, one other key thing to stress is permanent capital strategy. And this here, again, long-term foundation for long-term investments, ensures liquidity for future acquisitions, and reduces the risk of capital calls when they use bonds because they're multi-year contracts. And it also supports long-term debt instruments, which gives MicroStrategy financial stability. All so important. And volatility is what we like. High vol assets. This is kind of cool too. MicroStrategy sees price swings as opportunities, not only for them to stack, etc., but also for high performance securities, including options. I'm an options trader. Convertible bonds. And by leveraging Bitcoin volatility, it can attract a whole host of different investors for a whole host of different things. I'll get to a contrarian piece towards the end as well, talk about how money can be made as well, hedging MicroStrategy during volatile periods or even bear markets too. But let's get into the numbers, because I know that's why you're all here. How much will it be worth? So this is the model that I have, and I'll spell out my assumptions and how I got to those assumptions. First of all, we can see here the market cap, 49 billion. Bitcoin value, 18 billion. The amount of shares, I assumed 200 million shares just for giggles. And I also assumed the average stock price over the next 3 years of a very conservative $546. And therefore, they need to sell 38 million shares. That's about 18.7% dilution to get to their goals of raising $21 billion and stacking Bitcoin to be able to create that Bitcoin yield. Average Bitcoin per yield per year is 6.23% per my model. Sounds confusing, but that's basically, I took all the pieces from Michael Saylor, I sandbagged them, and created my own assumptions. Let's get into, first of all, how I used it in the model. I did, for the sake of simplicity, I used the Bitcoin price data from the Power Law. Shout out to Giovanni here as well. Rather than use anything else, I didn't want to use my own price prediction models. I'd rather use something that's become more of a standard out there for the Bitcoin price. Now, the first scenario is the Bitcoin bear case. What I've done is mapped out the price, and shout out as well to the MicroStrategy website, which is amazing, full of resources. But here you can see the price predictions and out to 2035, then the amount of Bitcoin held, the shares outstanding, the Bitcoin per share. I want you to focus very carefully on that, because you can see we've gone from 0.001245 to 0.001498. This is the bear case, by the way. And the share price under the bear case could go from, say, $218, which is the value today based on the model, not the current trading price, which is, I know it hit 207 yesterday. I may check the price of MicroStrategy right now. 244 is the price now. So it's lower. than the price. And we did hit 252, 253 today as well. And the market's closed. But anyway, tomorrow will be another day. The market cap is on the right. It goes from 44 billion all the way up to 949 billion, which is just shy of $1 trillion. The view of the share price over time, you can see it's exponential. Will go up fast because, again, what I like about MicroStrategy is they have a very, very solid approach to risk management, non-dilution, and increasing shareholder value as well. This is the bear case. You can see it goes down 2025, and then it goes up from there. But it takes us to that number of about $2,417 a share from 2035. We'll get into the long-term chart and what MicroStrategy did over the last since 2020 in a few minutes. But before, we're going to get through the expected case. All right, this is my price prediction expected case scenario. Again, going from $218 up to $6,000 a share in 2035. That'd be crazy. Market cap would go from 44 billion to 2.4 trillion. And I know it's crazy, but again, the Bitcoin per share is the same. The only difference is the Bitcoin price. Bitcoin price, and you'll see as well in this one too, the amount of Bitcoin held is the same. MicroStrategy is not going to waver how they operate. They're still going to stack the same way with the same rigor and methodology as they go forward. What the expected case chart looks like, again, imagine buying it for $207 yesterday, and it goes to, let me make sure I get this number right, $6,000 in 2035. That's a pretty good ROI. We'll talk about the ROI so far over the last 4 years as well in a minute. And the final scenario is the bull case. Again, market cap goes to $3.6 trillion. Share price goes to 9,000. And just for perspective, by the way, in 2023, my bull market prediction was $1,200 before the split. That's $120. And I was way off. And people thought I was nuts because back then, the price of MicroStrategy is $160. So it did a 10x. It did a 15x basically in a very short winter time, like 18 months. Anyway, the chart for the bull case, it gets even more crazy. And it goes right up there to nearly $10,000 a share. Again, for those who are looking just to get out to 2030, you can see about $2,500 bull case, 2030, $1,700 in the expected case, and 2030 bear case would take us to 687. Not very exciting, but that's where we are. Another view of all the data together for those that want to build a plan. I'm very big on planning. That's why I do all this modeling as well. Putting it all together, you can see all the different price targets, bear, expected, and bull for all the different scenarios. Again, based on the Bitcoin price from the power law. If the power law is wrong, this will be wrong. But in some cases, actually, the power law is kind of conservative. So that's why I like it when I dug into the numbers. And another view of what all this looks like is this. This is the ROI per year. Okay, it doesn't look very exciting when you see, oh, I'm only making 38%, 34%, 32%. The ROI per year falls down across the different scenarios. But what is interesting is the total ROI is extremely high over 10 years. Bear case, 1,000%. Expected case, 2,700%. And bull case, over 4,000%. That's 40x. So 10x, 27x, 40x. They are the scenarios over 10 years, which is quite astounding for investments in the market. And putting it all together, this is the visual of what the returns look like across the bear in blue, expected in red, and bull is yellow. I should have made the bull green. My bad. Now, that was the price stuff. I want to get back to the other way to play this too. This is the contrarian strategy. Again, investors like myself, we love volatility because you can make money on the way up and on the way down. Very important. And you can hedge. And of course, things that are typically most volatile have the most return. But basically, the advantages of shorting MicroStrategy was very interesting. One of the things that Michael Saylor also said during the call was, you're welcome, come on in, short my stock, like Kerrisdale. They got into a $3 billion short against MicroStrategy, allegedly, from videos we saw online, and they got their faces ripped off, okay? So Saylor is smart enough to know that the hedge funds that go short MicroStrategy basically are shorting Bitcoin, they'll basically get their faces ripped off at some stage or another. But here you can see it is possible, because of Bitcoin's wild fluctuations, to make MicroStrategy very attractive to shorting. That makes sense. And a whole bunch of other stuff. But the problem is it does pose a risk. The risk is on the right-hand side. You can go to them all. Again, if you are shorting, make sure you time the market correctly. But also, as I mentioned at the beginning, we're in a situation where there's the opportunity for that perpetual bid to happen. I said, probably when the ETF started, maybe there's a 20% chance of a perpetual bid coming in for Bitcoin from the ETFs. Now I know there's $42 billion of bid coming in from this company alone. And I also know treasuries are going to come in fit, fast, and furious. We're going to get our perpetual bid. I've upped my odds from 20% to about 33%, maybe 40% of that happening. That means bear markets will be nowhere near as vicious as they were in the past. I could be wrong, only assigning 33% chance that we get that perpetual bid. But either way, the drawdowns will be nowhere near as dramatic as they were in the past. Now, breaking down, because this is called the infinite money glitch, what it all means in simple terms. Basically, step 1, borrow money cheap. Step 2, you benefit from Bitcoin capital appreciation. Step 3, you pay returns through capital appreciation, i.e. bondholders through conversion options of the shares. And step 4, you do it again. You repeat it. In simpler terms, everybody, you borrow dollars at low interest rates, convert those into Bitcoin immediately, wait for Bitcoin to go up more than the interest on the loans, which their average interest rate is like 0.6% a year. And then you repeat. This is the infinite money glitch. This is what every smart company will do if they're sitting on a bunch of cash on their balance sheet. But there'll only ever be one MicroStrategy. Now it's part of the Magnificent 8 per Saylor as well. And the chart, this is so bizarre. I pulled this chart into the deck probably an hour ago. And I didn't realize till after the fact, because I did my video, started doing this with MicroStrategy back in 2020. They started stacking Bitcoin in August 2020. I didn't start trading until September 2020. So I was in like 3 weeks later after I figured out, I see what they're doing. Super interesting. But check this. You know, I like patterns and numbers. Since they started stacking, MicroStrategy is up 2,020% since 2020. I actually snapped the actual percentage to make sure I'm not making this up. It's real. 2020. Get it? I thought that was quite profound. Anyway, you can see I get excited by simple things. Happy Halloween, everybody. Hope you have fun with the kids tonight. Hit the like and subscribe. That was a 42 nugget infinite money glitch video. And it's fascinating. Absolutely fascinating. Treasuries will come. More of them will come. Bitcoin is scarce. ETFs are snacking so much. And I heard somebody say today, they think the bear market is in. I don't think so. I don't think so. And I don't think we're going to have another bear market. Bitcoin is up $200 since the start of this video. $70,200. Thank you all for coming. Sorry it was a heavy lift, but it's so important for people to understand this. And also, I'll stress again, they're going to raise $42 billion. And think of Apple. Think of future earnings. Where'd I put that? This. Okay? If this company is valued like an Apple, it is 4 times undervalued because of the returns that they're guaranteed to get on Bitcoin as Bitcoin price goes up. That's the story. Hope you enjoy it. Comments below are welcome. I read them all. Thanks, everybody. Have a great day. Thank you as well to the mods in the chat. Sorry I didn't have more time to be attentive, but it was a heavy lift. Yes. Happy Halloween, everybody. And I'm standing, which is even better. Thank you.